Hi everyone. In this session, we will explain what we mean by taxable income and how to calculate payable tax for a different range of income. We still in financial math domain. Okay, so we will start by the definition of taxable income. The taxable income, the amount of income that for which we calculate the tax. Okay, so by definition is the difference between total income and tax deductions or permitted deductions. So total income, the sources of total income are wages and salaries, bonuses, interest earned, commissions, allowances, okay? And we mean by total or per tax deduction can be given by different sources, okay? As tools used for work, safety equipment, self-education expenses, union fees, donations, car travel expenses, and so on. So with such sources or fees or expenses, okay, don't enter in the tax calculation process. For this reason, we subtract it from the total income to obtain the taxable income. Okay, so so we should also take as remark that the interest for us is a source of income. Okay, so interest on a joint account. So we have different type of interest on a joint account is shared between two people. So the interest should be divided by two to obtain the part of income. Okay, so for example, Annie uses this information to calculate her taxable income. Wages. For us, wages are source of income. Interest on joint account. So 665 should be divided by 2. Bonus income. Cost of uniforms. Deduction, tax agent fee, tax deduction, use of car, also tax deduction. So first we determine all income amounts, okay, all income amount, wages, interest, bonus. So we add the income amount as wages and we divided the interest on joint account by 2 and we added to the bonus. We obtain the total income. Okay, so and we determine all deductions. So all deduction are cost of uniforms, tax agent fee, and use of car. So we add this three amount to obtain the tax deduction. We subtract deductions from income to obtain taxable income. So we obtain the taxable income, the amount where we on which we will calculate the tax is $46,008. Okay, so to obtain the taxable income, we determine all the income amounts and we subtract the all the deduction to obtain this taxable income. Okay, and it is very easy also to use this information, this definition to apply or to solve the next exercise. Use the following information to calculate Gary's taxable income: wages, interest. So we have only to income amount, and we add 42,330 plus the half of the interest, because we have the interest on joint account. Okay, and we determine all the deduction, like 300 plus 156 plus 100 plus $3,220 to obtain all deductions. So we subtract the second sum, or the deductions from the total income, as we see here. So we to obtain the taxable income at $39,732. Okay, we should pay attention to the type of interest in each given. So if we have the given on joint account, or like in the exercise 4, we have interest, a simple interest. So we use it like it given is given. Okay, so very easy. You can solve the exercise 3 and 4 by yourself easily. So we move to define how to calculate tax, how to calculate payable tax. Okay, normally the taxable income is very important. It is a first step to calculate payable tax. Okay, on taxable income, the calculation of income tax is done using a tax table. In this tax table, the basics are the taxable income. Okay, so according to the taxable income that we have, the range of taxable income that we have, we can calculate the tax on this income. If the range of if the taxable income is between the 0 and $18,020, so we have no tax on a such amount of taxable income. If the taxable income is between, or is in the range of $18,201 and $37,000, so we have 19 cents for each $1. So we can multiply the excess, okay, excess amount of taxable income by 0.19, and so on. So the tax can be 9, no tax, 8% on an over income amount, so like in the second row, or the tax can be a sum of a fixed tax and 8% on an over income amount. Over income amount, we mean by that excess amount over 37,000, over $80,000, over $180,000. Okay, so we will see the next paragraphs, how to deal with this table and how to apply it to calculate payable tax. Like in the next example, we have used the tax table to calculate the tax payable on these incomes. We have $53,251. Okay, first step to calculate the tax payable, following we should follow these steps. Step 1, we locate the taxable income range in the tax table. So we should refer to the tax table to locate this number, okay, this taxable income. So 53,000. So no, yes, 53,000 belong to this range. So it is belong to the third row. And the third row, how to calculate the payable tax, we add 3. We have a fixed amount as a tax, $3,572 plus. So we have a plus here, okay? So we can see 300, okay, $3,572 plus, okay? So we have, and for each, we have 32.5 cents for each $1 over $37,000. So we use the row, or we subtract to find the excess amount, or to find the over amount. How to obtain the over amount, how to calculate it? We use the taxable income, and we subtract from it the range, the upper limits that we can have, 37,000, okay, dollar, to obtain the excess amount, 16,251. And according, all this information are indicated in the third row, like over 37,000. So we subtract 37,000 from the taxable income to obtain the excess. And this excess, 16,000, we multiply it by the percent, or the 32.5 cent, which it is equivalent to 0.325, okay, to obtain finally the payable tax, as $8,853.58. Okay, in the same way, we use the tax table. First, we locate 26,000, for example, as given in the second row. In the second row, we don't have a fixed amount as a tax. We have only 19 cents for each dollar over 18,200. So we subtract 18,200 from the taxable income, from 26,784, to obtain the excess, and we multiply it by 19 cents, equivalent to $0.19, to obtain the payable tax, equivalent to $1,630.96. Okay, etc. So very easy. We follow these steps, okay, as we see here, to calculate easily the payable tax. So like we see here, it is very easy to take as a homework exercise 2, 4, and 5. What about the exercise 3? Mrs. Jones has an annual salary of 33,700 and receive an income. So she yeah, the different incomes. As total income, we have 33,700 plus 896. So as total income, okay, determine the amount of tax. So total annual income, it is equal, no deduction, we have no tax deductions. So as taxable amount, we have the same one because we have no tax deductions. So this one, we locate 34,596. We located in the table, and we find it in the second row in the tax table. First, we calculate the excess. How we, from the second row, in the second row, we have to, we have to subtract 18,200. So from the total income, or taxable income, to obtain the excess. And we multiply finally the excess by the 19 cents, equivalent to $0.19 to obtain the payable tax given by $3,115.24. So very easy. Okay. Only we should know that only the taxable income is considered in this process. Which process? Process of tax calculation. Okay, so you can take as a hint from the beginning. We should precise for first total income, taxable income, and we use taxable income. We located using the tax table to calculate the tax amount. Okay, so it is very easy to follow and to adopt this process, these steps to calculate the payable tax. Okay, in the following exercise example, we have Sarah works as a secretary and receives a yearly salary of $34,479 plus an income of $1,950 per year from babysitting. So we have two incomes. Okay, we can add it to obtain the total income. Okay, then here total tax deduction, we have a total tax deduction. We use total tax deduction to subtract it from the total income to obtain the taxable income. So we obtain the taxable income from the difference between deductions, tax deductions, and the total income. We obtain $34,859. Okay, during the year she paid tax installment amounting, so she paid tax installments amounting to 3,265, a fixed one. Okay, so first we calculate total income, easy. Calculate that her taxable income, easy, that is the difference between total income and deductions. Then we locate using the tax table, we locate the taxable income to determine the tax payable on her taxable income. Okay, so we use it. We found that the tax is the taxable income is in the second row. So we obtain 19 cents per dollar in excess of 18,200. So we use 18,200 and we subtract it from the total, from the taxable income, and we multiply the result by the $0.19 to obtain the tax payable. Okay, tax payable on the tax payable that we have is 3,165, okay, and 21 cents. But she paid tax installment amounting. So if the tax paid is bigger or larger than the tax payable, then a refund is needed. A refund is needed. So a refund equal tax paid minus tax payable. If the tax paid is smaller than the tax payable, then a balance payable is needed. So we can evaluate the balance payable at the difference between tax payable and tax paid. So very easy. We use the difference between the bigger minus the smaller. Bigger minus the smaller. If the tax paid is bigger, so a refund is needed. If the tax payable is bigger, so a balance payable is needed. Very easy, okay? And you can find all the details in the next exercises, and you can take, for example, exercise 8 and 9 as homework. Thank you for listening. I'm waiting for any of your questions, and bye-bye.